Most people think a profitable business is a safe business. That's wrong. 8 out of 10 small businesses that fail aren't failing because they don't make money. They fail because the money doesn't come in and go out in the right order. That's a cash flow problem, and it's silent, it's sneaky, and it's completely preventable. Let's fix it. First, let's be clear what cash flow actually is. It's just money in, money out. Every day, not profit at the end of the year, not margins on paper, but right now, today, is there cash in your account? That's cash flow, and it's the only thing that keeps you alive. Here's why profit and cash flow are different. Say you invoice a customer for $5,000, that counts as revenue. But if they pay you in 30 days and your payroll is due today, you're stuck. Your bank account says you're broke even though the sale was real. That gap is where businesses die. The first thing you need to do is actually see your cash flow. Track money in and out daily if you can, weekly at minimum. Most spreadsheets won't cut it anymore. You need accounting software that shows you real-time numbers. QuickBooks, Xero, whatever works for your business, but you need actual visibility. Then create a cash flow forecast, not a guess, not a hope. List every dollar coming in and when, list every dollar going out and when. Go 3 months out, 6 months if you can. This tells you where the squeeze points are before they squeeze you. One brutal truth, getting paid faster is the easiest win. Send invoices immediately, not at the end of the month. Put clear payment terms on every invoice. Better yet, offer a small discount if customers pay early, something like 2% off if they pay within 10 days. People respond to incentives. 87% of businesses get paid late, so set up reminders. Email at 7 days before due, again at 14 days, again at 30. Make it easy for them to pay. Offer multiple options, online payment, ACH transfer, whatever. The easier you make it, the faster the money comes. On the other side, managing how you pay bills matters just as much. Don't blow all your cash on day one of the month. Stagger your payments. Pay the critical stuff, payroll, taxes, rent, first. Then spread out the rest through the month. This keeps your minimum balance higher. Build a cash reserve, not someday now. Experts say 3 to 6 months of operating expenses. Yes, it sounds huge. Start smaller if you have to, but you need a financial cushion. When customer payment gets delayed, when an emergency hits, that buffer is the difference between surviving and shutting down. Don't mix personal and business money. I know it seems easier at first. It's not. It clouds your real numbers. You can't see what's actually happening in the business and you'll mess up tax time. Open a separate business account and keep it sacred. Inventory is cash sitting on a shelf. Every dollar tied up in unsold stock is a dollar you can't use for payroll or rent. Use sales data to guide what you buy. Avoid overstocking. If you're in a retail business, this alone will transform your numbers. Look at your recurring costs. Subscriptions you forgot about, software you're not using, services that could be cheaper. 44% of small businesses fail because of pricing issues, meaning they don't charge enough or spend too much. Audit everything quarterly. Here's something people hate to hear. Pricing is the biggest lever on cash flow. If you're not hitting your target profit margins, no amount of sales volume fixes it. Understand your actual costs, what you need to make per project or product, and price accordingly. Underpricing is slow suicide. Seasonal businesses need to plan ahead. Retail peaks in December, tax services peak in March. These businesses swing wildly month to month. You have to save money during the boom months and live lean during the slow months. Map your cycles and budget to them. If a crunch is coming, don't panic and don't hide. Talk to your bank or lender before you need the money. A business line of credit is not failure, it's smart planning. Get access when you don't need it so you have it when you do. The worst time to ask for money is when you're desperate. Don't mistake sales growth for cash flow health. Growing fast can actually kill you faster. If you're taking on more business than your cash can handle, the growth becomes a liability. Know your velocity, how long money sits in the business before you can use it. Control growth to match your cash flow. not the other way around. Get a real person involved if you can, someone who actually understands your numbers, an accountant or CFO who reviews your books monthly, not just at tax time. They spot problems early when you can still fix them. Flying blind with your finances is how you end up broke. Use automation, set up automatic payments to go out on the right days, automate invoice reminders. Let your accounts receivable and accounts payable run themselves so you focus on the business. Automation also means fewer errors, fewer surprises. Finally, remember this: 82% of businesses that fail said it was because of poor cash flow management. Not because their product was bad, not because the market wasn't there. It was timing, it was math, it was fixable. You can be the 20% that gets it right. Cash flow is not complicated once you see it. Track it, forecast it, manage who pays you and when you pay them. Build a reserve, control your costs, and price fairly. That's it. Do that and your business doesn't just survive, it grows. And that's the whole game.